What is now time to catch up with the latest activity when it comes to the grain markets. Joining us today is Darin Newsom from Darin Newsom Analysis. Darin, it's always a pleasure to have you here on Market Journal. Thanks for coming back to the program.
Well, thanks for having me on again, Bryce. Really appreciate it.
Let's begin the segment getting your general feel of these markets. What are you seeing out there?
Right now, I'm seeing a bit of a stalemate, particularly in corn and soybeans. We've still got some early harvested bushels being sold into the market, yet long-term supply and demand indicators, future spreads are showing us that we're actually more bullish than we were a year ago at this time. So we've got some selling up front. We've still got a lot of bullishness out back. And right now, it's just kind of keeping the market at an even keel, really no reason to go very far one direction or the other at this point.
With that said, Darin, what are the corn and soybean markets telling us about harvest strategies, would you say?
Yeah, if we apply the gambler's secret, in other words, knowing what to hold and knowing what to fold, right now the market's telling us to sell corn into this market because there's just no carry. There's no incentive to hold it in commercial storage. Market needs it right now. We're hearing all kinds of basis reports coming from the country. On the other hand, we've got some carry building in the Nov-Jan soybean future spread. It's only covering about 36% calculated full commercial carry. It's still not bearish, but it's not as bullish as what we're seeing in corn. So if we've got it hedged in November, we can roll those out to January and wait for basis to appreciate from October through the end of December and see how that plays out.
Darin, I think you're heading the direction I want to go with a viewer question we received this week. They're asking about ways to capture basis improvement. Hypothetically, you're selling your corn there in town or at the ethanol plant, and you've got that basis opportunity. They're worried about not being able to capture that. What kind of strategies are there to protect that?
Couple different ways you can go. Let's say you have it. Let's say you have your corn hedged in the December contract. Well, just hold that December hedge and let basis appreciate into it. I mean, that's one of the best ways of doing it. That's how merchandisers do it. Now, if you're holding it in, say, private storage and you don't have any hedges on it, then it's kind of a gamble because you also have to play the futures price at that point. But you can hold it and you can watch the basis appreciate. Now, it may not be enough to offset, let's say futures start trending down, so it may not be enough to offset that, but you can still catch a basis appreciation. Best way is to have it hedged and let the basis work into your hedge.
Okay, Darin, let's talk about some of the other factors that seem to be popping up here. The headlines that might be influencing the markets either now or certainly down the road here. Having some challenges with transportation on the river. What can you share with our viewers about that front?
Yeah, it's going to take some wet weather this fall and winter to get some water moving back into the rivers, because right now barge freight's just skyrocketing, and so that's pressuring basis as well, because and pretty soon it's going to make it very difficult to move supplies down the river to get to port to go ahead and export. Now, watching the export numbers, we're still moving some, so it's not a catastrophe at this point. But let's just add something in there. Let's say that the railroad strike pops up again, or the potential for a railroad strike pops up again. Now we can't move it by rail. We can't move it by river. This could be a real problem for the markets. Doesn't matter if it's still long-term bullish. If we can't move it, that's going to really weigh on nearby markets.
Darin, there's a measurement of the economy I know you like to keep track of. You said it kind of closely correlates there. That's box beef prices. What can you share with us about prices we're seeing here in October?
Yeah, it was September was a tough month for boxed beef, but here early in October, we're seeing the boxed beef bounce back. So, it's telling me that, maybe I'm not going to say that the worst of the economic hard times are over, but we could be stabilizing in here. And if we're starting to find some demand for this boxed beef market again, that's a good sign. That means consumers are still willing to pay. We've seen a lot of talk about what consumers will or will not buy at this point. And so if they're stepping back in, they're not afraid of a higher priced beef market. That's a fairly bullish sign.
You and I having this conversation on Wednesday afternoon. A few hours ago, Darin, OPEC came out with an announcement. They'll be slashing production, it sounds like. Your take on that?
Yeah, my take on it is it's a political play. We know this is likely coming from Russia. This is one of Putin's chess moves, particularly with U.S. midterm elections coming up next month. So we have to add all of that into the calculation. From a market point of view, as you said, we were doing this on Wednesday. It was relatively muted. I do think that we will see a rally in the energy complex as a whole, particularly in both Brent and West Texas Intermediate crude oil. Will it have any follow through or spillover into the other markets like grains and oilseeds and so on? If it is, it might be rather limited. I still think those markets are going to come down to their own fundamentals, which are still bullish. But again, then we have to add in all the other problems like barge freight and possible rail strikes and so on.
Had another viewer question I want to get to, Darin, in the broadcast section of our conversation. They want to know what could spoil the current prices we're seeing in particularly the grain and soybean complexes.
Probably the biggest thing would be continued problems along the river and a rail strike. That again, it doesn't change the long-term fundamentals. We're still going to be short supplies, but it changes the demand. And if we can't export anything, then it all comes down to, like in corn, it all comes down to ethanol and feed demand. Right now, both of those are still strong. But again, any change to demand changes the supply-demand scenario, and so I think that's the biggest risk that we have. And then if it all of a sudden turns out to be a wet winter and we start heading into next year's crop with a better situation, then that could change the mindset for the 2023 crop.
All right, Darin, final word is yours this week. What else would you like to leave our viewers with?
There's so much volatility going on right now in outside markets, and it's really kind of leaving the grain and oil seeds alone for the most part. But we can't forget about the dollar. The dollar is going to continue to play a big role. At least it's going to continue to make big moves. So we're certainly going to have to pay attention to that, and the overall economic standing from the U.S. and the world as a whole.
Darin, as always, we appreciate your time here on Market Journal.
Thanks again for having me on, Bryce.